Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your StockMentor Brian Johnson, making professional trading simple. Welcome to another week of trading. This is an abbreviated week of trading. We have Monday off, come back on Tuesday morning into options expiration week, which is typically a volatile week anyway. I usually look for that volatility early in the week, then it tapers off later in the week. However, the last few have been very inconsistent. Some have been very busy at the end of the week, some have been very busy at the beginning of the week. It's really anyone's guess what we're going to see here. Just keep in mind that the futures markets, which will be opening here in a few hours, will continue to run into Monday. They don't stop, they don't quit trading just because our regular markets are closed. So once again, let me just tell you that do not be surprised if we open 10, 20 points up or down come Tuesday morning. If there's no big news, I don't know I would necessarily expect us to open anything but maybe flat to up a little bit or down a little bit. So might not be that big of a deal. Just want to keep you abreast of what may be happening here early on in the market come Tuesday morning. So let's take a quick look at the charts and see what we may be in for. And once again, I'm going to tell you exactly what I told you Friday. That is, I can build you a bear case, I can build you a bull case, and both of them have pretty powerful evidence behind both of them. So we are just going to let the markets tell us which way to go. Keep your bias out of it. Don't make up your mind which way you think it's going to go. Sometimes that's very, very easy to do, especially if you. I know that used to happen to me a lot when I would, before I really, became a professional trader. It was very common for me to allow my bias to come into things, only because it was influenced by some outside influences, such as other blogs or whatever. I'd watch, a lot of blogs during the course of a week. Some would be bearish, some would be bullish, and a lot of times it would just flat out leave me confused. So, my idea coming into my own video blog was to make something that was truly unbiased, which is the only real way to trade. You have to keep your bias out of it. Just allow the charts to tell you which way to go. And if that's up, great. If it's down, fantastic. But we don't have to make up our mind. We don't have to make up our mind. We'll let the charts do that for us. So in this case, I am still waiting for a break above now, really, the 10,200 to 10,250 mark, ultimately the 10,300 mark on the Dow. To start looking at anything to the long side, I might try to play a little bit here or there this week. If there's any volatility in the market, I might go ahead and try to day trade some of that. I'm not sure I'm going to do any swing trading. There is nothing setting up from a swing trade standpoint at this second. That might change come Tuesday if we break certain support or resistance levels, but at this point, there's nothing there from a swing trade. So I'm looking for a break above 10,200 or 10,250. That will start to get me a little bit more interested in a longer term hold, one direction or another. To the downside, it's still below the 10,000 mark, maybe below the 99.50 for the more conservative traders, but you can see what I'm looking at here, and that is this channel we've been following. Now, we did break out of this upper channel line, and we're into a new channel heading towards heading up. So we need to follow this closely. Like I said, the 10,250 gets us up and out of this channel. That would then, this looks more like a bear flag at this point, but a break up and over this area would make that a broken formation. And I would think a lot of bears will cover at that point, and we should see some more bullish action as we push forward. It would, by all accounts, if we take a look at the daily, probably leave the bears a little stymied. I'm sure a lot of them are expecting a huge drop. I know I've been told by some traders that they're expecting a huge drop come Tuesday morning. Absolutely could happen, but I can still see the bullish case here too. We broke this overhead level of resistance and been able to hold it for a couple of days. The NASDAQ seems to be pretty strong lately, so there's no reason to think that we couldn't also get a little bit of bullish action. Once again, that's why we wait for these breaks. Up and over the 10,250 gets you up over here. Let's start to give you some more entries to the long side. 99.50 gets you probably back below this area here. From a swing trader's perspective, I'm waiting for a break below 9,900, and then I'll probably really start to look at a more serious short from the Dow standpoint. NASDAQ, you can see here's that channel we're following, a break over 1790, which I talked about. Strong overhead resistance. Watch this level very closely. Otherwise, I'm waiting for a break below oh 1750 or 1740 here on the NDX. From a daily standpoint, you can see how we broke this channel as well, and now we've been headed nothing but up the last couple days in the NASDAQ, and this tends to be a leading indicator for some of the other indices, so we'll see if that holds true, and we'll see if they follow along and maybe give us a little bit more bullish action coming into early in the week. From a weekly standpoint, we do see here that we did get back up to the 20-week moving average. The next overhead resistance is right up here. I'll be watching this level closely as well from a weekly standpoint. That we won't have to really worry about until Friday's close. Then I'm looking for a close above this to get more bullish, but if it closes at it or right below it, still going to keep a pretty short-term bearish sentiment in place. Longer term, I am still neutral to bearish. SPX on a 60-minute following that same channel up, looking for a break over G 1085, which I've been talking about for forever. That's really my next line in the sand. Above 1085, I think things might get a little bit more busy. Break below the 1065 or 1060 level, I think gets us more on the bearish side. That would be a pretty definite break of this little channel, which is still a bear flag looking formation until we break above it. So we have to keep it in context and remember that this is a bearish flag until, like I said, we get back up above these levels. Now, if we look at it on a daily, we can see kind of the bullish scenario here, and that is it's at or on this overhead resistance, but it is outside of this trend line, is back into this channel that we've been looking at here. So the market's really floundering here. They're very, very indecisive at this point. But see, look what we've been doing. Up, back up here, step down, back up here. So step down, up, step down, up. So until some of this changes, I'm obviously still remaining on the bearish side of things. But a break over 1085 could give us some short-term bullish action. Weekly, same thing, looking to come back up here and test the 20 week. Now, it has not done this like some of the other indices have, so this has been very weak lately. Been held back. Still got to get that break above 1085. That's just line in the sand. Got to watch that closely. VIX here, look at how this thing's been rolling over on the VIX. No reason to think at this point that unless there's some major news that comes out that the VIX doesn't head down, which then of course lends itself to the what? Yes, bull scenario that we've been talking about here. And that would take us back to at least 21 on the more shorter term time frame, which is the daily time frame. Might see that dip back down here to 20 or even 19 if the markets continue their move to the upside. So you can see the VIX is giving us kind of a more bullish action here. If it turns around and starts to create a symmetrical triangle, then we have a little different look to it. But right now, we may reach this area down here at the 21 level, which is going to mean more bullishness in the markets regardless. From a weekly time frame now, this does look like a bull pullback, a bull flag. So this could mean some more action to come to the upside. So do you see the divergence in signals? You can look at a 60-minute and get one sign. You can look at a daily, get another. Look at a weekly and get completely something different. And that always tells me that there is indecision in the markets right here and to be very careful with your trading. Coming into options expiration, I will remind you again to drop your share size back. Take profits whenever necessary. Who cares if you make half of what you want to this week? The point is, if you can make money during these options expirations,